All right. So Thursday night training, we are back in the building. Is it just me, or does it feel like we were just here like yesterday, right? The
It's
days are,
not just you.
does it feel like that to you, Doreen?
It's going by so fast.
So
It's
fast.
almost scary.
And
It
I
is
tell you,
scaringly fast.
yeah, the end of the year is here. We might as well just, hey, it's here. So this is our last quarter push. And that I'm gonna stay on track. I did want to say this. This is the time, you want to start setting goals for yourself coming into the next year, or before that, how you want to finish the year. Don't think that it's too late to accomplish a goal. Make sure it's realistic goals. It's not too late, but you want to have that stuff written down. And one of the things that I would totally recommend is that you have it in a place where you can see it every day. You have to connect with your goals. You have to connect with your dreams, not just visually, but when you do see it every day, you start to build a relationship. You start to build a desire for that goal. The more you interact with the goal, and so I know, like for me, I have like my dream boards, if you will, sticky notes. It don't even have to be a dream board, right? Sticky notes all over. Seriously, I need to see it. I need to see it. And the more you see it, the more you believe it. And as your belief for that thing increases, your desire increases, right? And like my mom used to always say, where there's a will, there's a way. You start to, you know, uh, methods and different ways of accomplishing that goal begins to come to you. It begins to come to you. And it's not by accident. It's simply because you set your sight. You set your sight on that particular goal, and and it will come to you. It will definitely come to you. But you got to have that belief. That's the foundation to it. That's the foundation to it. So David just came in. Chris just came in. Woo, woo. Glad you all are here as well. Glad you all are here as well. So what we're going to do, for those of you that may have missed this first piece here, we are going to open up the floor with testimonies for this week thus far, or from last week's training, testimonies, aha moments, something you realized this week, successes, some lessons that you may have learned. This is what we're going to do so that we can get the best out of our time together. So with that being said, you can raise your hand. If you raise your hand in the chat, I'll see it, and then I'll call you out. Aha moments, success, lessons learned, lessons learned. So while those that are preparing to come out, let me share one for me, aha moment for me. Now, one of the things that I always do is I'm always looking for aha moments because I don't know everything, right? I want to realize some new stuff. I want to be able to say, oh, I didn't realize that. Oh, I see the correlation now. That's what you want to strive for because it's broadening your understanding of the chart. And so I definitely have a aha moment this week, and it all works together. Let me just say that, but still, it's enlightening. So I had an aha moment with a particular pattern. It was a descending pattern, and we know that that is a reversal pattern. It's a bearish reversal pattern, and I realized that pattern in correlation with a engulfing candle, and I'll show it to you on the chart so it makes sense. I just kind of put the correlation together and was able to use that as another confirmation. And so I'm always looking for stuff like that to confirm what I'm looking at, right? As I always mention, we're like detectives. We don't want one or two confirmations. We want multiple confirmations to tell us, hey, you're right, you're on the right track. This is the position you need to be taking. Even if you have one compelling confirmation, that's not enough. That's not enough. You want multiple, at least 3 or more strong confirmations. And so that was an aha moment for me today. And what I was doing this week was I was looking for those reversal patterns, multiple different reversal patterns. And I basically put limit orders in all week, limit orders. And all week, I have not had a loss this whole week. And so I like that, of course, right? I like that, of course. But the bigger picture in that is, you just set yourself up for more stress-free, easy trading methodologies. That's really the name of the game, right? So I wasn't at the chart nursing the trade or anything like that. I've already identified what I was going to do and at what price point, which gives me control of my money, right? So like I'm not held hostage to what the chart want to do. I'm controlling it. And that gave me the ability to do that. And sure enough, just like the analysis said, it did exactly that at that particular price point. So that was good. That was a big thing. I used to do limits more so in the past. And as I got into the training aspect, I kind of got away from it, but I'm definitely going to get back to it because it frees me to do other things. So that was my aha / testimony thing going on. Anybody else, this is your time, your moment to jump on out. Did I hear a cricket?
No, Paul has his hand up.
Oh, who, Paul? Okay, I'm sorry, Paul, I missed you. Go ahead, Paul.
Hey, how you doing?
Awesome and incredible.
Well, I do have a testimony, but it's not really my testimony. It's somebody else's testimony.
Awesome.
This person don't know that I'm about to put them in blast.
Okay, I like that. Go ahead.
But it's a good one. So this person is pretty much gonna be finished with my boot camp for the month.
Awesome.
She'll be finished tomorrow. But her results has been phenomenal. So I'm gonna assume this week was a good week for her because it's been a great week for me.
Yes.
So, with that being said, I just wanna do an early congratulations to Nikki for her wonderful, wonderful performance. She pretty much had around an 83% winning rate for a month.
For the month, that's real good.
Yes.
Awesome.
So I want to congratulate Nikki for following the rules of engagement. Keep sticking to the rules. Didn't change anything in her plan. I check up on her to make sure that she's doing all right. She's always sending me her results every Friday. So with that being said, I want everybody give Nikki a congratulations.
Yes, y'all come on out and verbally congratulate Nikki. Congratulations, Nikki.
Congratulations.
Awesome.
Congratulations.
Great
I am
job.
definitely looking to be that person soon.
Congratulations.
Congratulations.
Yes.
Congratulations.
Awesome. That is a huge accomplishment. Now the results is the cherry on top. The real accomplishment is that Nikki was coachable, right? And she did what she was told to do. She stayed engaged, those types of things, and she was consistent. That always equals success. Would you agree, Paul?
Yes, totally agree. She stuck to it. She didn't change a thing. She followed everything she's supposed. She took the lesson and just grabbed about it and just ran with it. Just
awesome.
Ran with it. So
Awesome to hear.
Very proud of her.
Awesome. Is Nikki on tonight? Yeah, I saw Nikki. I saw Nikki.
She's quiet in the background.
So Nikki, let me ask you a question. Nikki. After the boot camp, so she graduates tomorrow.
Well.
Okay, so after the graduation, right? We got to come up with some type of ceremony or something. I don't know. Everybody doing stuff virtually. We can figure something out. But after your graduation tomorrow, Nikki, how confident you feel, going solo with what you've learned thus far? How comfortable do you feel doing that? I don't know if she's able to come out, but her mic, I don't know if it's a computer issue. Um, yeah. Well, that's what it's designed to do. I don't want to speak on her behalf. Whenever you can come out, you can come out and respond. But that's really what it's about. Once, because this is training wheels. Would you say, Paul? You
Yeah.
kept the training wheels on her
Yeah.
and guided her.
My hand, guiding her through the process. Gave her some great training. And now the training wheels are off. She can leave the bird's nest. Now she can go with her live account with confidence, taking trades.
I love it. I love it. That's what it's about. Because at the end of the day, you can be anywhere and you want to be able to look at the chart and say, oh, it's doing this, it's doing that. This is what I'm going to do. That's all it is. And the longer and the more you engage with these charts, you'll be able to do it. You'll certainly be able to do it. So congratulations again, Nikki. Anyone else, any aha moments, any testimonies, anything related to training, any lessons, any questions, anything? And so what I am getting from you all is that everything is good. Y'all good to go. Y'all are good to go. That's what I'm getting. Okay, so let's move on to the next phase. Excuse me. The next phase is questions. Any questions about the charts? Anything that you've seen this week that you may have had a question about, something that you may not have understood, or anything as it relates to trading? Any questions in that regard? Anyone? Just raise your hand and I'll call you out. Any questions? Any questions? So y'all just making it real easy for me tonight, because what I'm getting is that you all are good to go. Y'all got the understanding going and y'all rocking and rolling. And that's the goal. That's what we want. That's what we want. What I would say is never miss an opportunity to get greater understanding. Never miss an opportunity to get greater understanding. Take advantage of the resources that you have. Because I'm going to tell you something. From my experience and my training background and my affiliations, listen, you didn't have this. Whenever the training went, if you weren't there, you missed it. If you weren't there, you missed it. It wasn't a situation where you could call the person to get some, to answer a question or to get some one-on-one time. None of that existed. It was the training, and you better get it from that, because that's it. So to have an environment where you have access to your trainer, and you have access to other individuals within the group that will take time out, is priceless. I'm telling you, it is. It's priceless. So never take advantage of an opportunity to learn more. Okay. So what we're going to do now is we're going to jump on the charts. We're going to jump on the charts.
Before you do that, can I say one thing real quick?
Absolutely.
Hi, this is David.
Hey, David.
Hi. I just want to thank you for helping me to get a better understanding of what's really going on here.
Awesome.
And I would like to thank Ms. Doran for endless support.
Yes.
And additionally, I've seen a couple of Paul's videos over the last few days, and they are definitely very enlightening to me, the way I learned.
Mm-hmm.
For some reason, I learned differently. But I am definitely not just trying to be a sponge, but a lot of times I feel like I'm not really understanding what I'm doing. So it's better for me to listen than to start talking.
Absolutely.
So I really, really appreciate all of the collective knowledge that has been passed. And again, thank you, Ms. Doran, especially.
You're quite welcome, David.
Yes, David, you are more than welcome. And I totally understand that too. It's like when you don't have a real clear understanding, you really don't know what to ask. So I totally get it. But that's why we're here. And I'm sure I speak for Doreen and Paul and saying that it is certainly our pleasure. We definitely want to see you all win. We want to see you all win. All right, I was just letting someone else in. Okay, so what I'm going to do, we're going to jump over on these charts real quick. Let me know when you can see my chart. All righty, can everyone see the chart?
Yes.
Okay,
Yes.
good. Okay, awesome. So now that I'm on the chart, Doreen, she'll be looking and see any questions, raise your hands or anything like that. She'll call you out there. I won't really be able to see it at this point. So what I'm gonna do, of course, is I'm gonna go over just market structure, right? Because that's where it all begins. And we're gonna really kind of start peeling this onion back so that you can begin to see price for what it is, no matter what you're looking at, Forex, stocks, indices, crypto, it doesn't matter. Price does the same thing. So it's really important that we understand what price is actually doing. And so we're going to talk about market structure. So as you can see, I basically took everything off the chart except for the zones and my big arrow. Where is it? Yeah, big arrow, right? So we're going to be, so in other words, I just took the support and resistance off and we're going to look at price. We're going to look at price, okay? And so what I want to do too is start with the daily. It's important to start with your higher time frame because that sets the tone for what's happening on the lower time frames. The daily and not the monthly is simply because most of us, I think it's safe to say, we're not position traders. We're not really trying to stay in the trade, a month and better. So the daily gives us a closer view and shorten that run, that time frame that price runs. And the daily is definitely a strong higher time frame level where price really respects those zones. And that's what we're looking for. So what we want to make sure that we understand too is that the higher the time frame, the stronger the structure is. Doesn't mean that price not going to break those structures. It's just stronger. It's just stronger, and we want that. The lower the time frame, the more fake outs that you might have. It's not as stable as the higher time frame, right? So that's the reason why you want to use the higher time frame. So we're looking at the daily, and we want to really eliminate the noise, right? When you say eliminate the noise visually, and it also eliminates the clutter in our head, right? So once we're clear in our head, we can see the chart in a much more clear fashion as well. So in order to do that, it's important that really we just need to be naked, right? Everybody be naked. No, but we need to be naked in the sense that we don't need a whole lot of stuff on the chart, because naturally our eyes are going to be looking, and then we trying to dissect what's this doing and what's that doing. And the more that we do that, the further away we get from what? From price and what price is doing. And that's really where we want to focus our attention. So nothing on the charts. We're just looking at price action and what it's doing. So on the daily, what we're going to do is we're looking for two things on the daily. We're looking for the trend on the daily, and we're looking for what price is currently doing. So it's two things. Now the trend and what price is currently doing can be opposite. It can be opposite, and that's okay, but that's what we're looking for, because it's very important that no matter what, we never are lost in the market. The minute you're lost, you lost. So the minute you're lost, you lost. Now, if you lost before you put the trade in, good, don't put the trade in, right? Until you know what price is doing. If you don't know what price is doing, you don't know how to position yourself. So that makes sense, right? So we need to know at all times what price is doing. Now, that's not to say that you're predicting, oh, price definitely going to go here and price going to do this. It may do that. We just don't know when. but that's not really what we're trying to determine. We just want to know what stage in the 3 stages of price movement that price is in. It's either going to be in a continuation, a correction, or consolidation. Now, consolidation is one of those, it is a movement, but I don't really put it in that class, because even consolidation can be bearish or bullish. So it could be a continuation or a correction, but it's just consolidating at this time. So I just threw that in there. But what you want to look for is the trend on the daily, overall direction that price is going in, and what is price doing now? What is price doing now? We always want to be, looking for patterns and trends, and identify that, right? And identify that so that we can clearly see where price is. Make sense so far? So this is just some foundational market structure stuff, just some foundational market structure things that's going to definitely help you to identify where you are in the market. So trend, what is price doing now? Now, as far as the trend goes, you have your trend bullish or bearish overall, but regardless of the trend, there's always going to be the opposite, candle going on, right? Because price don't just drop to the floor or skyrockets to the sky. There's always going to be that battle between bulls and bears. But despite that, there's one that's dominating. So you can be bearish and have bullish activity, but overall you're in bearish territory, and vice versa. So those are things that you want to, be mindful of as well. Okay. Now, 3 positions, directions price move in. We have our continuation, which is always in the direction of the trend. That's why it's so important to know what the trend is. We got to start there. Where's the overall move going, right? So if the overall move is south, then we know now we can determine what the continuation will be. And the continuation is always in the direction of the trend. Okay. And vice versa, bullish bearish is always in the direction of the trend. And then obviously a correction is just that. It's going the opposite of the trend, right? So when you are on your daily and you're looking at what price is doing now, always remember the 3 questions. Always remember the 3 questions. You want to ask yourself anytime you hit a chart, any time frame, what is price doing? Like, where is price? Meaning, like, what is it doing? Where's price? How did price get here? And where do I go from here? What do I need to be doing at this point? Whenever you can answer those 3 questions, you'll never be lost in the market. Never. Never, ever, right? So the 3 questions are, where is price? Meaning, where is it? What is it doing? How did price get here? Now, I'm not talking about the trend. I'm talking about what price is doing right now. Where is it right now? How did it get here? And where do I go from here? So with this pair here on, what are we? Bullish. We're bullish. See, I thought it was bearish. We're bullish, right? So remember, the 3 directions price move in is either going to be a correction or a continuation, right? Remember that the continuation is always in the direction of the trend. So if the trend is bullish, the continuation, all of my bullish activity is a continuation. All of my bearish activity is a correction. So with that being said, looking at where's price right now, and I like my little trend lines, right? Bearish trend line. So where's price? If we're in a bullish trend and we have bearish, where's price? Price is bearish. That's where it's at right now. It's below my 13, but even I should have took the 13 off Let's take the 13 off. Let's take 13 off. We just want to look at price. That's it. Right? So we're going down. So where's price? Price is in a what? A correction, right? Why? Why is it a correction and not a continuation? Anybody jump out? Anybody other than Paul and Doreen?
Is it because the trend is bearish?
Okay, so the trend is bullish. I'm sorry, I did say bearish. I forgot. I didn't.
I meant bullish.
Yep. So the trend is bullish, and right now we are in a
Bearish.
little bearish move going on, right? So
Right.
is that a continuation or a correction?
Correction.
There you go. It's a correction. And the reason why is it a correction?
Because it's not going with the trend.
Absolutely. Come on, Stacy. That's what I'm talking about. That's what I'm talking about. Yes. And it's really that simple. So now just that alone gives you insight as to what you really need to be doing. Because the first thing, now this is what I do. I teach trading with the trend. Do I counter trend trade? Yes. But let's trade with the trend first. And then as you build, you know, you can maneuver back and forth. And also trading with the trend gives you the highest probable winning position. And it's the highest quality trade to be in. And that's what we want, right? That's what we want. So with that being said, yes, we need to know that trend, right? Okay, so that's what price is. Now, how did price get here? Now, that question is going to lead you into a little deeper into the analytical aspect of reading market. That question, how did we get here? Because now you have to look at the previous candles and see what took place. And that's very, very important, right? So in relation to this downward move right here, what happened? Remember, there's three: the impulse, correction, and continuation. So after a continuation, we're going to have a correction. After the correction, we have what? A continuation. That's all price does. Now, of course, you're going to have the consolidation in there, but that's more of a pattern, right? That's the beginning of a flag pattern. So for instance, and jump in if you have any questions, because if you're anything like me, when I have a question, I need to get it out my mouth before it slips out of my head. That's just how it was, right? So don't hesitate. I do not mind. Just jump out and ask a question. So right here, we have this bullish move right here, right? This bullish move right here. Somebody else jump out and tell me, where is price in relation to the trend right here? Are we in a continuation or correction?
Continuation.
Continuation, absolutely. And why is that?
Because we're trading, it's trading in the direction of the upward trend.
Absolutely, absolutely. That's what it is. This is just that simple, right? And then I'm going to show you the benefit of knowing that, though. The benefit of knowing it. Hold on one second. I guess I need my glasses. That will be good. Let's pull her down some. Okay. That's it. Okay, so right. So this is a continuation. And then after it continued, it consolidated, right? It consolidated. Now, we don't trade consolidation. If you're in a trade and it consolidates, that's one thing, that's fine, but you don't get into it like that, right? So we wait for a breakout. It broke out to the upside. And see, this is the reason why I said that, consolidation could be a bullish or a bearish consolidation. It's not so, it's more of a pattern. So in other words, it broke out and it broke out to the upside. So really all of this, We had the break because it consolidated, but all of this is a bullish move, more or less, is a bullish move. And then, of course, after a continuation, what comes after continuation?
Correction.
A correction. That's all price is doing. In between the continuation and the correction, or the correction and the continuation, in between that can be consolidation. Does that always happen? No, it happens more often than not, because the market consolidates, roughly 70% of the time, the market is in some form of consolidation. But it could just go up to a point and then drop. I call that a pivot. So those really are the two movements directions that price action goes in, right? So when you look left, when you answer that next question, how did I get here? You have to look left to see what was price doing before this happened? Before this happened, what was price doing? Those are the questions you want to ask yourself. Well, when I look left, what I see is that it was consolidating, and then we had a bullish breakout. That's what I saw. So that's a continuation of that bullish move here. You don't have to go all the way back. Just your immediate left will give you a really good story. And because we know that price don't go straight up and straight down, at some point we know it's going to do what? It's going to go the opposite direction. So that's what happened right here. We got to this point, oops, and then it corrected itself. It corrected itself. It just took a breather. It went back the other way. Now, what I want to ask you, and it's okay, let's talk it out. How do you know, because I'm sure that these are questions that may have come up, is how do you know when the correction or the continuation is going to begin? How do you know that? Well, one of the ways that you know that, again, look left, because the left is your cheat sheet. I promise you it is. Now, and this is structure. What is structure? Consolidation is structure. Support and resistance is structure. This trend line serves as structure, right? Pivots, that's when price go up or down and just reverse without consolidating. That's structure. So we're always looking left to identify structure because price respects it. It just does, right? So when I look left, what I'm looking at here, what I see is some structure. See some more consolidation going on right there, right? That's structure. That's indecision. That's like turbulence, I like to call it. When we're flying, everything is smooth sailing and boom, we hit a patch of turbulence. That's likened to consolidation because there's indecision going on. When you're flying and you got that indecision going on, it's basically saying, I want to stay steady on this course until I get out of this little bumpy area, basically, right? So when I look here, look at this bullish candle, right? Because this is after this candle closed, that's when we went into a continuation, a correction. So let's look at this candle in relation to what? This area right here. And you always look at the close of the candle. Everything is the close of the candle because when the candle closes, that is the final confirmation, if you will, of what price wants to do, right? So when I'm gonna just put a horizontal right there, but this is the candle we're looking at. So it closed right here. Now, in relation to the close, what for our structure, look left, what structure can we identify? The first area is this consolidation. Now, this candle actually closed inside of the consolidation. It closed inside of that turbulence bubble. So if you on a plane and the plane shaking, it's turbulence. That's what's going on. It's shaking. You don't know if it's, we're going to rise above it or we're going to go below it and come back. We don't know how we're going to do this thing on the plane, but we know right now is indecision. And that's what took place here. So what happened is it pushed it back because what we hit some turbulence. It did not break through the turbulence. So if it don't break through the turbulence, it's going to go the opposite way, and it pushed back. And that's exactly what happened. The left side of the chart will always tell you the story. It's always going to let you know, it's going to confirm why price did what it did. So you may be saying, well, shucks, okay, how do I know, it's going to, continue, go into a continuation? That's how you know. Does that make sense so far? That's how you know.
Yeah.
Put your horizontal on the close of the candle and then follow that horizontal line to the left, looking for structure. So we hit our first structure, this consolidation. It wasn't strong enough to push up and beyond it. It wasn't strong enough to push up and beyond at that time anyway. So what did it do? Push back. Now, another indication that we are going in another direction is engulfing candles. If you don't study any other candle pattern, study engulfing candles. It is the strongest reversal candle in the industry of Forex. And it's very consistent, even more so on a higher time frame, right? But it's very telling. Very telling. Now, real quick, for my super new people to the industry, an engulfing candle consists of a large candle and a small candle, right? The previous candle is the smaller one. Remember that. The previous candle is the smaller one. The candle after that is the engulfing candle. That's the candle that will engulf the previous candle. Another thing about engulfing candles are there has to be an opposite candle. So it cannot be two bearish candles and one bearish candle is smaller than the other one. No, it has to be a bullish and a bearish. It has to be a bullish and a bearish. Another fact about the engulfing candle is that the opening of each candle need to be, aligned. So not the opening. So the previous candle, let me just show it to you. The opening, you see the opening of this bullish candle right here, because a bullish candle opens from the bottom and closes at the top. So the opening of the candle typically should be aligned with the opening of the engulfing candle. Now, this is still considered an engulfing candle. This is still considered an engulfing candle because it is clearly much larger, and this is a daily now. So this is a large candle. That's a large candle. It totally engulfs this candle, hands down. So I would consider this is an indication. This is an indication of some bearish activity, strong bearish activity. But those are the elements of an engulfing candle. So you have to have two opposite candles. The first candle has to be smaller than the engulfing candle. Now, also with the engulfing candle, it does not include the wicks. We're only talking about the body of the candle. So the whole body of the previous candle must be able to fit completely inside of the candle that's engulfing it. And when you have those, I mean, they're so powerful. Oh my gosh. That's an engulfing candle. Now, and you have engulfing candles all over the place. Here's another engulfing candle. You see this bullish candle right here? And then the previous one is bearish, right? The previous one is bearish. This body fits completely inside of this body. See that? This body here fits completely in this body. Now, the difference between a bullish and a bearish engulfing candle is the candle that's engulfing the other candle. Whatever candle that is, that's the engulfing candle. So if that's a bullish one, then this is a bullish engulfing candle. If it was bearish, like over here, it would be a bearish engulfing candle. Now, whenever we see a engulfing candle, bearish or bullish, that is very telling as to the direction price is going in. Very, very telling. You do not want to ignore that. Now, because we're going to trade with the trend, we want to be more, we're going to pay more attention to the engulfing candle that's aligned with the trend. So if it's bullish, we're looking for bullish engulfing candles. Okay. Now that's some more advanced structure, which we're going to get into that and just trading engulfing candles and how that, plays out with structure and all that. We'll do that. But just know that is how you know that a continuation is ensued, is a beginning. We have what? We have price, that the candle closed. Where did it close? It closed in consolidation, right? That's the first. It closed in consolidation. And you want to look at these candles. Now, what's another thing you might notice about the candle? This particular candle that closed is small. It's small. So Paul, let them know, what does a small body candle, what is it telling us? If we see this candle and it's small, what is it saying to us?
Well, if you see a small candle, that's a pretty big indication that buyers are coming out and sellers are coming in to push the market down.
Absolutely. Listen, I get so excited because when you see it, it's like, listen, you in control of these charts. You in control of these charts. No, you ain't got to be having no anxiety and all this, that, and the other. You in control. And sure enough, what Paul said, buyers are leaving. And who showed up? Now, are we surprised? No, we should have expected it. We see this little candle. We see consolidation. We should expect it. See, oftentimes, I think that, like in the beginning, it is overwhelming. I'll be the first to tell you, trading can be very overwhelming, learning it, in the beginning. And we're trying to learn everything all at one time. We're trying to get all of this stuff. Inch by inch, it's a cinch. Take one piece at a time, understand that, look at it on the chart, go through different pairs, different time frames, and just look at it, identify it. Like tonight, for instance, we're talking engulfing candles. Go through several charts and just outline engulfing candles. Just outline it. And what happens is your eyes automatically train to see it. Engulfing candle. Outline it. They're all over. You cannot miss them. Engulfing candles. Right? This is an engulfing candle. That's another one.
There's an obvious one. There's an obvious one right over here. That big green right there.
Look at that thing right there.
That's a huge telltale.
That's a huge one. When we see that, we know a candle like that, that joker going up. It's going up. Now, this is the reason why our system is so phenomenal. Our simplicity trading system is because these zones, in my opinion, the supply and demand zones is everything. Like, you don't need nothing else on the simplicity system. You really don't. Because now this serves as a confirmation. Now, remember, I just brought up the zones. We were talking strictly price. But look at where this big, humongous candle came from. You wouldn't see this from the supply zone. You're not going to see that from the supply zone. Right? It came out of the demand zone, pushed straight up out of there. It didn't even go in. It just pushed straight up out of there, got in the area, right? Look at this big one here too. This was bearish, right out of the area, knocked it right out the park. So it's things like that that you want to start getting your eyes accustomed to. Make sense so far before we move on? Everybody good? Everybody good in the building?
Janice, when you get the engulfing candles, does it, isn't it stronger depending on where it's located? For instance, if yeah, if it's, it weighs, I guess, less if it's in the middle of a trend versus at the beginning or end of a trend.
Absolutely. That is such a good point. And that's why, again, I like these zones being clearly identified, because when it's coming out of a demand zone, that's a much stronger push up rather than in the middle of the two zones, the supply and demand zone. Now, yeah, you may still have your engulfing candles, but the strength is much stronger coming out of the demand zone than it would be. Now, that's not to say it can't happen, because other things, outside of what we're just looking at can certainly move the market and move it in a very aggressive way. But just in general, yeah, coming out of the zones, that's the best time to catch it. Best time to catch it. Now we're going to be talking about, re-entries and pullbacks and different things like that. But from a structural standpoint, absolutely. Absolutely. Okay, so let's take a look at, well, let me go back. What was I on? Anybody remember? What was I on?
UJ.
USD.
No, it was odd.
Odd JPY. Mm-hmm.
Yeah, it was odd. Yeah, see, that's the thing with, no?
It was USD JPY.
Oh, okay, UJ.
Yeah, it was UJ.
Oh, okay.
Boom, boom. Okay. All righty. So now we know that price is currently in a correction. I gotta get it right. Correction. The last question is, where do we go from here? Now that's for us. How do we get in the trade now? So we've identified where price is. We identified how it got there. Now the last question is, where do we go from here? How do I get in this trade? Well, if we're trading with the trend, when are we going to get in? Are we going to get in while it's in a continuation, or are we going to get in when it begins to go into a correction? Anyone?
Correction?
Right. We're going to get in when it's in the correction. Now, when the correction begins. So remember those things that we just talked about, how to identify when a correction is ensued. And, when it's about to happen, you looking for certain things. So again, engulfing candles is one, and that's the one that I would definitely put my stamp on. When I see a bullish engulfing candle, that along with my my MACD, remember we want multiple confirmations along with my MACD, right? I'm looking left. When I start to see when I start to see my bearish candle get smaller, that's indicating to me that something is coming, And then the final, for me, I love my little trend lines, when price breaks structure. When price breaks structure, bam, it's telling you, I want to go in a different direction. And when you add the other confirmations I just mentioned, that's when you want to go ahead on and take the trade. That's when you want to go ahead and take the trade. Now, of course, we're on the daily. I enter off of the 15, and that's what I suggest, the early entry. We're not trading on the daily, but we just analyzed it. You can analyze any time frame. And the same analysis that we did on the daily is the same thing you'll do on any other time frame. Right? It's the same thing. So now that we've analyzed the daily on UJ, right? It's bullish. Right now, we're still in bearish, momentum going on. We want to wait for some things to confirm. We want to wait for some things to confirm. Now, when we drop down to the 15-minute, what we're looking for is higher, lower time frame agreement. Higher, lower time frame agreement. Now, I'm looking for price, right? I'm looking for price on the 15-minute to be in a demand zone. And to be perfectly honest, it doesn't matter to me if the trend is bearish. The trend could be opposite, because why? The higher time frame controls the whole deal. That's like the who's the king of the jungle? The lion is, right? The lion controlling all of that stuff. That's the daily controlling it. But price needs to be in agreement, though. Price needs to be in agreement. So we have a bearish candle right here, and we're looking for a buy, right? We're looking for a buy. So if we drop down to the 15-minute, we should see price inside of the demand zone or just coming out of it. I'm thinking it's somewhere in the middle there. Let's check it out. Okay, so good example. It's bearish. The trend is bearish on the 15-minute, but it was bullish on the daily, right? I don't care about that. Why? Because the higher time frame controls the smaller time frame. But what I do need is for current price, what price is actually doing. I need for that to be in agreement. So if I wanted to take an early entry for a buy on UJ, would I be getting in now? Anybody other than Doreen and Matt? Would I be getting in now?
I say no, because that's a bearish candle.
Right, the candle is bearish. That's one reason why, and I agree. No, we won't, because the candle is bearish. Look, and we don't want to look at just one candle. No, we want to look at what the direction, where's price going. Remember trends and patterns, right? Where's price going? It's going down, right? It's going down, right? So we want to buy. Remember, we buy low and we sell high, right? So we buy down here, we sell from here. So price is going where I want it to go before I get in. So where does price need to be?
In that green zone.
It needs to be in here. It needs to be in here. We only buy. Say again?
I was just saying the MACD down there also says bearish. So it's not an agreement to get in the trade.
Absolutely. Absolutely. But you were able to determine that, Stacy, without even the MACD. Right? We want to analyze price, and then we bring in all the other elements to confirm what we already know. That's what we're doing. That's what you just did, Stacy. So now let's take it a little deeper. Y'all ready to go a little deeper? Y'all got it?
Yes. Yes.
Y'all got it? So the question becomes, okay, we know that price needs to be in the demand zone. But shucks, where at in the demand zone? Right? I got all this going on. Where I'm gonna put it? Where I'm gonna put it at? When I'm gonna set my alert? What price point or my pending order or whatever? Remember the cheat sheet. Always look left. Where in relation to this demand zone, where did price visit last? Look left. Well, it was in this area. In this area. Now, okay, because I'm telling you, this stuff just repeats itself. And when you see it, you see it. So in this area, what do we see in this area? I just talked about it. Other than Stacy, Paul, and Doreen. What do you see? I just finished talking about it. We're looking for a buy, so we want price to come into our buy zone. that then puts us in agreement with price on the daily. So we're good. Now that we're in the zone, where do we actually get in? What area? So what we want to do is look left to see where was price previously at in this area. Now we're over here. This is where price was. What do we see that confirms that bullish run? That bullish intention? What do we see?
Engulfing candle.
Yeah, absolutely. Absolutely. We see what kind? A bullish or bearish?
A bullish.
A bullish right here. Right here. Awesome, Denise. Awesome stuff. Right here. Bam. Right? Inside of what? The demand zone.
Yes.
We like that. We like that. Now, one may say, well, shucks, Janice, I see a bearish engulfing candle too inside the demand zone. Y'all see that? Y'all see that? That's a bearish engulfing candle. It's inside the demand zone too. So now what? Are we confused? Do we get uncomfortable? What's going on? No, we don't. That's the reason why we never rely on one confirmation. It's collective confirmations that's saying the same thing. That's saying the same thing, right? So this bearish candle should not cause any issue because we have other confirmations to support what we are doing. Now, what you got to do also, we're going to go just a little deeper. Always looking left. This just didn't happen. Look left. What took place? What was price doing before this happened? Before this happened, remember it's bullish over here because we bearish right here. But what was price doing?
Trending down.
Right. Now, the trend previous to this trend was bullish. So, knowing that the trend was bullish, what direction would this be? Correction? Continuation?
Correction.
Correction.
It's a correction, absolutely, right? So that's not the strongest move. So it's corrected off of the bullish trend down into what? The demand zone. In other words, in order for price, and I know this is very elementary, I'm not trying to be facetious at all, I just don't know any other way to say it. But in order for price to come down, right, it have to start at some high point and work its way down, right? In order for price to get into the demand zone, it has to be coming from a downtrend or downward move. It has to, right? So the fact that this bearish engulfing candle is here, it doesn't really concern me because one, we have a bullish engulfing candle that came after it. We're inside of a demand zone where buyers are accumulating. See, this could have very well been a nice little fake out. Boom. This took a lot of money, right? But add up your confirmations. Bullish engulfing, demand zone, right? And what are we doing right now? Okay, so look at the MACD. Look at the MACD. The MACD signal line is on top, signifying sellers, right? So will we be concerned? No. Why? Because our rules didn't line up. So we wouldn't have even been in this trade at this point. That's if we were over here. We would not have been in this trade. Just because it's in the demand zone, you don't just jump in and take a buy. Make sure your confirmations add up. And in this case right here, we still signal line on top. So what do? We wait. What are we waiting on? We wait for our MACD line to cross over. When did it cross over? Right there. See that? Right there. Provided all our other confirmations and stuff, I'm just there. Right here. This is when it crossed over on this candle. And lo and behold, what is it? A bullish engulfing candle. A bullish engulfing candle. So we want to look, everything on our charts tell a story. Everything tells a story. We just have to read the story, right? So with you, Jay, anybody was thinking about getting in, want to buy, what you want to do is wait for it to come inside of your buy zone. That's the very first thing that you want to do. And then of course you want the rest of your confirmations to line up. MACD line need to be crossed over on top, right? And I like my trend lines. I like my trend lines even inside the zone. I want it to break, a bullish break on the trend line. And of course you can use your 13 moving average. So you can bring in other indicators, but just from a price standpoint, we've already determined what needs to happen and we haven't used not one indicator. We already know what we're waiting on, right? All right, so odd NZD, now it's just gonna be question and answer. So get ready, guys. I'm going to call out some folks. And listen, there's no pass or fail. We all learning this thing together. I don't know how to get, oh, okay. All right, so we're on the daily, and this is odd NZD on the daily. Okay. So Chris, tell us what is the trend on odd NZD on the daily?
Hello, can you hear me?
Yes, I hear you.
Okay, so the trend is bearish at the moment.
Yes, the trend is bearish. And what is price currently doing?
Price is currently in a continuation.
Bam, there you go. It's in a continuation on the daily. And when we drop down to the, now that we determined, that's all we need to do. Honestly, that's all we need to do on the higher time frame. No sense, don't stress yourself out. Is bearish, is in a continuation. What should we be looking for if we're trading with the trend? The position we should be taking is what?
The position we should be taking is, if you're talking about from a smaller, you're talking about from the smaller time frame or just from this time frame?
Well, yeah, based on the trend on the daily, what position should we be taking? And I know everybody kind of do things differently, but if you're trading with the trend, we should be looking for what?
Well, at this moment, I will actually take this since it's a continuation.
So you'll be looking for a sell?
Correct.
On the 15-minute?
I would be looking on the sell on the 15 or 30-minute since it's the delta.
Yeah. Yeah, and I'm just using, because some people like, and you're right, Chris, you might trade the 30, I'll do the 15, but the point is you're looking for a sale.
Correct.
Yep, absolutely. So looking at where price is right now, when we go to the drop to the 15-minute, we should expect to see, remember, this is a lot of activity in this one candle, and it's going down. So on the 15-minute, it's going to take more 15-minute candles to make up one daily candle. So, and I want to say, Dave, he told me, I think it was like 96 candles, something like that. But the point is
96.
Is 96? Yep. So we push down, push down, push down, push down, push down, right? Just imagine the 15-minute in this one candle. All of these multiple candles coming out of this one candle on the 15-minute chart, right? And so it would have basically be coming down into what? Into your demand zone. Into your demand zone. Does that make sense? Let's check it out. Let's check it out. Okay, so there you go. You're right where you should be, and the trend is opposite, but do we care? Because the smaller time frame don't dictate the bigger time frame. That's just like your 5-year-old telling you, the mama and the daddy, it's time to take your bath, mama. It's time to eat. It don't work like that, right? So the higher time frame rules. and it's going right where we want it to go. Now, inside of this demand zone, so if we're looking for sales though, remember we're looking for sales. So where does price need to be before we enter in a sale?
In the resistance zone.
In the resistance zone. You talking about the supply zone?
Correct. Yes.
Okay, yeah.
In the red.
In the red. There you go. In the red. And the resistance is because it's on top, guys. Right? So that's the resistance. Support is on the floor. So yeah, it needs to be inside our supply zone. Now, because we know that now what we're going to say is, where at in the zone will I put my price? If I wanted to put in a pending order, if I wanted to set an alert, what price point am I looking at? What area am I looking at? So that's when you want to look left to the previous activity that was taking place inside of the zone. And when we're looking left, what are we looking for? Things like bearish engulfing candles, right? We're looking for stuff like that. We're looking for wick action. Wick action. If we had a lot of wick action going on, we're looking for that, right? And you can use those areas as indications, like these two wick actions going on right here. This is a bearish engulfing candle as well, because this candle, the body of this candle is slightly shorter. It's slightly shorter right there, right? So this would be where I would put my alert, or if I set a pending order, it would be at this price point. Even if price pushes up some, which that happens, but you got a good entry. You got a good entry. And all the other confirmations must line up as well. All your other confirmations must line up as well. So you see how you just took control of the market? And trust me, it's a good feeling when you made the decision based on your analysis, because price repeats itself. It does, right? Any questions thus far? Was that a lot, guys? Was that a lot to kind of, Stacy said, yeah.
I was saying that was good. That's good stuff there.
Yeah. No, but I understand it is a lot though. I often tell this story when I was, learning stuff. I would just have to tell the person that was teaching me, that's it. I don't say another word. Let me process this. So I understand.
Actually, I think I may have had an aha moment during this training with looking at the date, the daily, and going with that trend, regardless of all the other indicators in a smaller time frame. Don't let that confuse you.
Right.
Stick with the plan.
Absolutely. And just, declutter all of that. I know the more until
it's too much for me.
Yeah, until you really got it down, just keep it simple, because the more you go from one time frame to the next, and then this time frame, trust me, it's going to confuse you. The daily, what's the trend? What's price currently doing? Okay, and then the 15-minute needs to agree with what price is doing. It needs to agree with the trend on the daily. Now the trend on the 15-minute, that's just a smaller piece of the overall trend. So it don't matter if it's bullish on the daily and bearish on the 15-minute. Where's price right now in relation to the trend on the daily? Because that's what I'm following. And correct me if I'm wrong, Doreen, but I believe Doreen trades off of the daily. Am I right, Doreen?
Yes, I do. I do.
Yeah. And Doreen, what would you say your I'm sorry, hold on. What would you say your success rate is and your accuracy rate is as far as your trades are with that?
Well, I know I can sum it up by saying when I don't follow the trend on a daily, then it's pretty much 100% that I'm going to lose.
Yes.
But the way you're doing it,
Mm-hmm.
like Stacy said, that's an aha moment, because that can allow me to get into more trades the way you're showing
Absolutely.
it. Yeah, so I really like that.
No, that's so true. Absolutely. And that is definitely it allows you to get in. And I like the idea of setting my order to say, okay, once you get here, Mr. Candle, that's when I'm gonna play. Right? It just gives you that sense of control um over your over your trade. Over your trade.
That's because you're the boss of it.
Right. And you position yourself to be the boss. Absolutely. Absolutely. And when you start to see the just how the market moves in relation to engulfing candles, of course, we got the zones here. That's a big help. When you start to see how price moves and back test so that you can see how it consistently does the same thing. It consistently does the same thing. And you can see that just from the structure without anything else, all the other indicators is just cherry on top.
Can I ask a question?
Sure, absolutely.
Okay, so we saw in the daily that the trend was going a certain direction. So we're waiting on the 15-minute for it to get into the supply zone. You showed us how to look at that engulfing candle in that range to pick a point of entry. Now, how would you determine your stop loss and take profit?
Okay, one moment here. Okay, so now the stop loss is subjective. That depends on you. Everybody's risk tolerance is different. Everybody's account size is different, things like that. There are some rules of thumb, however, that you can use, right? You can certainly use your low, like if you're getting in on a buy, for instance, then you can use the previous low or the bottom of your demand zone, depending on where you got in at. I have to say that, depending on where you got in at. Now, one of the things that I like to do is I like to already determine, what loss am I comfortable with. So if I'm comfortable with a 50 pip loss, stop loss, then I put my price point at the stop loss at the 50 pip. So again, it's subjective, but you can do that. Another thing that you can do is you can, where you entered at, like if you're buying, then you can put your stop loss under your big arrow if you wanted to do that. Depending on where you got in relation to your zone, you can put your stop loss below that, or up in here for a sale, you can put it above this one. Or like I said, you can determine, okay, I'm willing to lose, $100 off of this trade. See, all of that is going to be relative to your account size, because your account size determines your lot size, right? You can do a 2-to-1. What I would suggest, honestly, is that you use the compound sheet that Paul has in the group, because that one has more risk management incorporated in there. And I think you did a video too, didn't you, Paul? Yeah.
Yeah, I did a video
Yeah.
of it explaining the compound sheet and how it works.
Yeah. So definitely use the tools to help you guide you along until you can just kind of master that. And then the take profit is, again, you had several options. You can trade zone to zone if you wanted to. If you're going to take a sale in relation to, the higher time frame, of course, let's just say it's a sale. You take a sale and you got in the sale inside the zone, and you can just take it down to the demand zone. You can do that, right? You can just do your 20 pips. Now, what I suggest is that after about 30 pips, lock in your position, lock that in, and just ride the rest. Ride the rest until you get stopped out. Now, when you're doing your trailing stop, you do your initial trailing stop. So now you have 30 pips locked. You're good. You're walking away with money. And then what I like to do is every 5 to 10 pips, I move my stop loss down to that area, so I can just continue to capitalize, continue to pinch off of the run. Okay. Any other questions about anything that we talked about today. Hold on 1 second here.
Janice,
Yes.
hey Sean. Does it matter if it the candle on the daily is coming into the buy zone?
If does it matter?
Yeah, like it was the example you had before. It was coming close to the buy zone, but it was in a bearish. It was bearish. The trend was bearish. So I was wondering if it's in the buy zone, but it's a bearish trend. When I go to the 15, should I just still looking for the trend instead
Yeah.
of the?
Yeah. You definitely want to trade it with the trend. And remember, it's going to be bearish going into the demand zone. It has to be, right? Because it's coming from a high point and it's working its way down. So on the 15 minutes, so if the candle is inside the demand zone on the daily, right, more than likely it's going to be in the supply zone on the 15 minute, because it's like what, 96 candles to make one daily. So if the candle was even right here and it came down, remember, visualize the 15 minute now, came down, and eventually it will come down, and then what? It's going to come right back up into your supply zone. And that is what you want, because now the 15 minute is in agreement with what? With the trend on the daily plus it being in the supply zone. So it's a good thing if it's a what you call a downward trend, if we got a bearish trend and current price is, let's say, it's inside here. That's great, because when I get to my 15 minute, it will likely already be or close to my supply zone, which is where I want it to be. Because I'm looking to trade the agreement of the higher time frame to the 15 minute. I'm trading the agreement. I needed to agree. So let's kind of look at this one. It's not all the way in there, but let's see. So on the 15 minutes, so because we are bearish, we got a bullish candle that's near the demand zone, right? I do expect that at some point, we just don't know when, but at some point, price on this daily is going to come down here in this area somewhere. Why? Because we got some wick action going on in here, right? Price was actually here. And so it's going to meet it, find itself back there. But let's go back to the 15. See? It's in the supply zone, because on the daily, remember, it takes this one candle, this one daily candle. Well, let's just, because this is active, let's do the one that closed already. So this one candle here, you have 96 little candles, if you will, inside here that's actually populating on the 15 minute. So now we in the supply zone, which is in agreement with the bearish trend on the daily, right? And price, what is price doing on the daily now? Even though it's a bullish candle, but what price need to do? Price coming down. Remember, this is a daily candle, a 20, 30, 40 pip drawdown on a daily candle is the whole run on the 15-minute chart. Okay, so let's go here. From this point right here down to where price was previously is 25 pips. This whole run is only 25 pips. So if I'm on the daily and I have a daily candle, all I need is for that one candle to pull back 25 pips. That will be my whole zone to zone position on the 15-minute chart. It doesn't have to be a bearish candle, because we're looking for sales, and because the trend is bearish, this candle doesn't have to be bearish. It could be bullish. I just needed to pull back. Just pull back, right? Just pull back. Now, that's when I like to pull out my trend line, right? So what happened? It broke my trend line and closed, telling me that, okay, some bearish activity is coming into the picture. And where's price currently? It's below my trend line. So if price is below the trend line, that's seller's territory. So my expectation is that price is going to come further down. It may not even come all the way down here. It doesn't have to. For me to get 25 pips on the 15-minute, it don't have to come all the way down there. I just need a 25 pip drawdown on that bullish candle, and I would have made my whole run right here. You see how that works? That's some magic when you think about it, right? So did that answer your question though?
Yeah, yes.
Yeah. And then you know what I do as well? So we got this active candle right here. Now I'm looking left. I got a bearish engulfing. It broke my trend line. So now sellers want to play some more. Sellers still want to play, right? Now I'm looking at this wick. So this, from the close of that candle to the bottom of this wick, is roughly about 16 pips, right? So if we go to 25, right around in this area here, let's see where I can get 25 so I can show you. So basically, right around in here, I just need the candle to pull back to that. It's already showing indications of doing that. Why? Because I got a bearish engulfing candle. The bearish candle broke my trend line and closed. And price itself, this candle and this candle, is below my trend line in seller's territory. And then, here we go. So of course you have other confirmations you want to be, add to that, but just from a structure, a market structure perspective, that's how we reading the, the market. All right, Tay. Any other questions before we go? I hope that this has, shed some light on market structure. And if nothing else, just, show you how valuable it is, how important it is to know it. Would y'all agree?
Definitely.
Yep.
Yeah.
Definitely agree.
Mm-hmm. Got it.
Yes and yes.
Absolutely. And that's really when trading becomes easy, because now you know what you're looking at, and you control when and where you're going to get in and get out. All righty. So I think I'm gonna wrap it up here. It's been awesome class tonight. We're back in full effect. Now, throughout the week, I know that Paul and Doreen are just wealth of information and resource, and that's great. So definitely continue asking questions. If there's something in particular, an area that you want me to train on Thursdays, just send that to me ahead of time, and I'll be more than happy to go over that as well. Okay. So with that being said, we're going to call it a night. Graham fam in the building. We're going to call it a night. You all be safe, and I'm going to see you on next week.
Thank you. Very good class.
Thank you, Janice.
Awesome. Y'all have a
Thank
great
you, Janice.
Thank
It was
you.
very good, as usual.
Thank you.
More than welcome.
Thank you.
More than welcome. Y'all have a great one.